This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, February 28th show, bringing in expert advice and inside knowledge on today's events in our local economy and how it can affect your money. That is the reason that I'm here and the reason why this show exists. If you're hearing my show at a different time or day, you're listening to a rebroadcast, you can talk to any of the guests that I have in studio. Call into the show at 1-855-400-1150. Again, it's 1-855-400-1150 or online at themoneyhour.com. Right now in studio, Skylar Olsen with Zillow. Skylar, thank you so much for coming back. It's always a pleasure to hear what's happening over at Zillow. We had Lloyd in from the assessor office and you from Zillow, so lots about what's happening in the market.
Yeah, thank you for having me. It's always a pleasure.
And a little background about Skylar. Skylar joined Zillow in the summer of 2012. Her research and that of her team is used by consumers, policymakers, and other researchers to understand real estate markets and make better decisions. Skylar created many of Zillow's real estate index and matrices, including the buyer-seller index and one of my favorites, the buy-rent breakdown horizon. She currently holds a PhD in economics from University of Washington and specializes in environmental. Say that. Environmental. Oh. She currently holds a PhD in economics from the University of Washington, specializing in environmental economics. Her academic work focuses on using housing data to explore environmental issues. Prior to her working at Zillow, Skylar was honored for teaching excellence by the University of Washington. Also speaks all across the country for Zillow summits. Again, Skylar, it's just exciting to have you here. And I know you guys are doing a lot of amazing things over there at Zillow. And I want to talk about what's the high-level view of Seattle housing market right now.
Yeah, as your previous guest mentioned, Seattle's doing really great, right? We have really incredible job growth. I think 57,000 new jobs added in 2014 alone.
Wow.
It's really feeding housing markets in this area. We saw over the past year, housing values went up across the entire Seattle metro. So that includes those three counties.
Yes.
Went up 6% year over year, which is still very strong home value growth, and that's been coming down from some of the record high numbers that we saw in previous years. But a lot of the strongest growth where, how home value appreciation is being maintained and continues to be fed is surrounding those tech centers, right? So places, Bellevue, Kirkland, downtown.
So when you're talking about the employment percentage of growth that we've seen there, do you know what that is in comparison to what we've seen?
You mean a pickup of
correct.
Job numbers?
Uh-huh.
I don't have those job numbers in front of me, but the other day we were ranking across, employment growth in different metropolitan areas across the country, and Seattle is definitely up there with the fastest growth in many areas.
Yeah, that's so exciting. And are younger Americans going to start buying houses? Some say that they're kind of preferring renting. And what are you seeing kind of in that age group? Yeah,
that's actually a really interesting direction of research that we've been diving into and trying to flesh out because a lot of people are interested in that topic. And one of the things we heard a lot before we started doing a lot of investigation was that younger Americans, millennials, they don't want to buy. So we did a survey. We went out and asked them. Right? And it turns out 83% of millennials say they have expectation they'll eventually buy a home. 53% of millennials who are renting that we asked say that they plan on buying within 1 to 5 years.
Okay.
So they plan on buying. It's just going to take them a little longer. And there are certain things standing in their way that's been slowing them down.
So what are those things?
Well, one of those things is you're just, this is a generation that's delaying major life events that precipitate home ownership, right? So specifically, they're getting married later and they're having babies later. Interestingly, actually, they're delaying marriage by a little bit longer than they're delaying baby. The age of first birth is 1 year before the median age of first marriage, but this is a new age and new choices, right?
Yeah.
So, but once we find that it's that finding the long-term partner where you're finally able to maybe give up on living downtown or renting or being more transient, and you're ready to be more stable, stay put for longer, where buying makes more sense.
Yeah. And because you would have to imagine in that age group especially with the data that is all around us, that they're doing the research. It's not the lack of information that they're not. So that's interesting to hear that those life changes and things are really of why they're making in that commitment of home ownership.
Yeah.
Because you and I probably would agree that the opportunity to buy a home and all the benefits versus rent, I don't know why people would be renting except for they just don't want to have that commitment of homeownership.
Right. And there's also some, we all know, right, as you were talking earlier about having that down payment, right?
Yes.
So you got to have that down payment in order to buy a home, right? That's kind of one of the...
Well, unless you qualify in the income bracket. If you make less than $97,000, there's a lot of grant programs.
That's true, yeah. And there's a lot of opportunities out there. And so, one of the things that we find, though, is millennials in particular... they're, to the extent that right now they are a generation that rents more, they have low home ownership rates at their current age. They're also, rental affordability is a huge issue. Particularly in Seattle and other major metropolitan areas where there has been so much population growth, supply has not been able to keep up. I know we joke about the crane and how construction is kind of crazy around here, but population growth is also incredibly crazy around here.
Are you still seeing that there's multiple offers that are coming in on rentals?
A lot of so the rent is slowing down on the high end.
Okay.
Right. So and
high
that
end
makes
would be
sense.
Considered.
Yeah, let's see. So I actually don't have the tier breakdowns on the rent angle.
Okay.
Yeah, but when we think about what the construction that we have seen, it has been on that more luxury end, luxury condos downtown in prime areas. These are expensive, very high valued place to live. So the supply started responding to all this rental demand, but more on the luxury end. So that's been starting to slow down.
Okay.
Right? But on the middle tier and on affordable units, they still go like hotcakes, right? And you still have a lot of pressure on rent values in that space. Yeah. And if you're paying an incredible amount on rent, it makes it very hard to save for a down payment, especially in a population that has record high student loan debt payments, right? And other debts that they have to take care of. So it's a hard time to save for this generation.
Yeah, and so if you're one of those listeners, it's a hard time to save, and you're just making a decision just because it's the idea of homeownership. You're not in that time of your life where you want to buy a house and be committed and stuck like that. If that's what you're thinking, then this comment is not for you. But if you're sitting there renting, thinking, "Oh my gosh, I totally get what Skylar's saying, and it's actually kind of stressful not knowing if my rent's going to be going up, and I don't have the money to buy a home," just pick up the phone, give the show a call, because look at what your options are. Take those options back to your mom and your dad and your grandparents and see if any of your family members are willing to help you out. Because if you make too much money to qualify for a grant, and if you make $97,000 or less, you don't make too much money. So if you make more than that and you can't qualify, maybe there's some options to help get you in, because the numbers can be pretty amazing when you look at them most of the time. Skylar, let's talk about expenses in the area in that.
So we find in Seattle that you end up paying, so let's say you're out there renting, right? You're going to end up paying around 31% of your income on your rent.
Okay.
Right? Is that how it kind of breaks down? And that's really much higher than historical levels. So before, in the Seattle metro, that was much lower, right? It was more affordable to live here.
Yes.
Right. Okay. But rent has grown, so much faster than income. It's just been outpaced that now it's fairly expensive to rent.
Yes.
Flip it on its head and talk about, let's ignore that down payment for a while, and just focus on the mortgage payment, right? That mortgage payment, because interest rates are still so low, right, have remained low. And even if you're paying private mortgage insurance, so you're paying that, let's just assume it's kind of like a I mean, I know you mentioned a lot of how many options that there were, but let's just think about it for a second as it's just kind of effectively increasing your interest rate.
Okay,
more or
of
less,
course. If you're paying it monthly, it would.
That's kind of how it functions.
Yep.
So even, so right now, super low interest rates, even once we add that primary mortgage insurance, the share that you would spend on a mortgage is still very low and certainly much, 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 much lower than millennials' parents would have paid, or certainly much lower than their grandparents would have expected to pay on a mortgage payment.
And I think people tend to not think about things that, obviously everybody knows about the deduction. Take a look at that. People don't think about the tax credit, or they don't know about it. There's opportunities there. And also looking at that mortgage payment that you're making, a portion of that actually is going into what I like to call a little home bank account. You don't have access to it till you sell the property, but still the money's going in there. You're paying down the principal, and your mortgage is fixed outside of taxes and insurance. You've got a 30-year, hopefully, fixed rate mortgage, whereas rent, who knows where it's going to be. And here's the other key thing. There's an end in sight. At some point in time, you will actually have an end in sight to where you don't have to pay payments. What do you look at rent? If you get yourself and you're out of the position and wait too long to where you're not in a position to be able to afford anymore, the biggest mistake I get concerned for people that are renters, it's not being able to worry about if your property value is going to decrease. Because you hear people go, well, what if the market drops? It really doesn't matter. It doesn't matter if the market drops. Appreciation is an added benefit of homeownership. What do you need to be asking yourself if you're not owning a home and you're paying rent? What if rents go up so much you can't afford that rent anymore? That's the concern, and that's the risk that I think you have as a renter. So what about, let's go back to, mortgage and my arena and what you're hearing over in your arena as far as down payments and options and things that people are looking at.
Well, we're finding that, those lower down payments are just more and more popular than they used to be. And also that credit availability is, easing up. It is becoming easier to get a mortgage. Before, buyers had a pretty rough go of it, not only because inventory was very low, which, we still have that problem in this area, actually. Still waiting for that to come back a little bit. But
please come back.
Yeah, totally. Before, buyers also had the added difficulty of credit that just was incredibly constrained. You know, almost because of an overreaction to the bubble and some troubles that we got into there. Well, now we're starting to see, loan to value ratios that, are a little higher. We're starting to see, more credit being extended to, lower credit scores. So that is certainly easing off. And, to your point, when you were talking about the buy rent break-even decision, right? I think you hit the nail on the head in the sense that you got to be thinking, you got to live somewhere. You're going to be buying or you got to be renting. And in a place where rent is growing very quickly, that really does contribute to, the decision to buy. But it's not just that. It's, as you also mentioned, you're watching the equity grow in your home, and it amounts to being a bit of a savings and, a piggy bank. And when you rent, one of the options that you have is, instead of, you didn't pay that down payment. So instead you could be taking that money and investing it in stocks or bonds. But if you're not comfortable doing that, you're not someone that's going to, search out there to form that investment, that, and a lot of Americans aren't, right? We see that they don't actually, buy stocks or bonds or invest to any great rate, that that buy rent decision is really going to come down even more towards buying. And of course, it's always very personal,
of course.
But, when you're thinking about, whether or not to buy a home, thinking about, the fact that not only are you going to be buying housing, but an investment.
Exactly. Skylar, thank you so much for coming in. Yeah, definitely look forward to having you come back.
Alrighty.
Coming up next in the money, our long-term care insurance is important coverage that provides valuable support and financial resources that help cover the cost of long-term care that you might need in an even fair illness, accident, through normal effects of aging. And Janet Greenling with Genworth Financial PNW Insurance Services right here on 1150 AM KKNW after the short break.